Royal Bank of Canada, that's the country's largest lender by assets, fell the most in more than a month after meeting analyst estimates but not exceeding them. The Toronto-based bank reporting earnings of $1.06 Canadian per share that matched the median estimate of analysts surveyed by Bloomberg. Well, Barbara Stymiest is Group Head of Strategy, Treasury and Corporate Services at the Royal Bank of Canada, and she's joining us from our Toronto newsroom with more on these earnings. Barbara, welcome. Thanks for joining us.
Thank you.
So, indeed, analysts are saying that, yes, you matched estimates, but there was a little disappointment. I'm curious what your reaction is, especially given that your growth rate in terms of profit, not the same, not as much as some of your other Canadian banks. How do you think you're going to approach that to try and increase that growth rate for profit?
I think you have to actually look at the basis upon which you're comparing growth rates. We actually had reasonable results last year as well, so that the growth rate we achieved for both the fourth quarter and for all of fiscal 2009 was quite strong. We had strong top-line growth. In the quarter, we reported $7.5 billion of revenue, and the bottom line as well, and that reflects the strength of our retail franchise and the strong capital markets earnings we had as well.
And I imagine you were also encouraged by the Canadian jobs picture. We've been talking so much about the U.S. jobs picture, but Canada actually seeing an addition of jobs. Consumer lending, your biggest area of business, does that mean then that that's going to continue to strengthen as the jobs picture perhaps improves in Canada?
Yes, it will. I think we had 11% growth year over year in our consumer lending, and very different mortgage market, as you may know, in Canada versus the U.S. It's actually one of our best lending products, and Canadian mortgages perform very well with very, very low losses associated with the mortgages. Canadians are more conservative. The nature of the products and the nature of the structure in the country means that we're seeing a good demand. Job growth drives demand for lending products, and we expect growth to continue.
That said, of course, you did see an increase in loan losses and loan loss provisioning. So even if the economy is recovering, what challenges do you think remain in the area of consumer lending?
Well, we do expect that loan losses will peak after we see the beginning of the turnaround in the economy. So we're anticipating that the credit environment will improve towards the middle and latter part of 2010. We are actually seeing stabilization in the amount of loan losses that we reported this quarter versus last quarter, and I think that bodes well for the future. And as you indicated, job growth is important to bring stabilization to the economy and to preserve our good lending.
Barbara, what's your appetite for acquisitions in the U.S. and abroad, and would you consider partnerships?
We have a very disciplined approach to acquisitions. What we have found during the turmoil of the last 2 years is that we're a very attractive employer, and we've attracted a lot of teams and individuals into a number of our businesses, both capital markets and wealth management. We continue to do small strategic acquisitions, both in the U.S. and in other parts of our locations, including Europe. We have done partnerships. We do have a joint venture with a European bank in our custody and fund administration business that works well. We have a partnership for a credit card processing business, Moneris, here in Canada, and I think that joint ventures for financial services are quite common, and we're a good joint venture partner.
Barbara Stymiest, thanks a lot for joining us. Appreciate it, from Royal Bank of Canada.